Good afternoon, everyone. Welcome to today's informational webinar on the Value Line Daily Options Survey. My name is Brian Fong, and I'm one of the Senior Equity Research Analysts here at Value Line. I'm also one of the representatives of the options team. First off, I'd just like to comment on how happy we are to host the event today. I'd like to start by thanking our longtime subscribers to the Value Line Options Survey and welcoming those of you who are new to the service or are considering a subscription. Now, before I jump into the heart of the presentation, for those of you who might be joining us for the first time, I'll just provide an overview of who we are at Value Line. Value Line is an investment research corporation headquartered in New York, and we've been providing information to our subscribers for more than 85 years. Our flagship product is the Value Line Investment Survey, which is a unique service that provides financial information designed to help investors make informed decisions that fit any number of different individual goals at various levels of risk. The product includes data, information, and analysis on about 1,700 equities that trade on the New York, NASDAQ, and Toronto stock exchanges. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and a lot more. The investment survey is created by Value Line's research department, which is comprised of more than 60 analysts, economists, data experts, and quantitative specialists. And our research, which is published weekly, is completely unbiased and independent. Unlike a lot of other Wall Street brokerage firms, Value Line has no investment banking business with any company included in the 1,700 that are listed in our service. Value Line also does not execute trades for its subscribers, and so we have no vested interest in whether or not our subscribers buy, sell, or hold any specific equity. Also, it's worth noting that none of our staff of professional security analysts are permitted to own shares of any company that they cover. And now, with that said, today's presentation is going to be focusing on the Value Line Daily Options Survey, which is a service that's designed to help our subscribers identify attractive option investments, and it's been a part of the Value Line family of products for more than 20 years. On today's call, we're going to be going over the basic outline of the Value Line Option Survey, including the reports that we administer on a weekly basis. We're also going to show you some instructional tools that can be found on our website. And we're going to be taking an in-depth look at our screener, where we'll run a few screens and show you how useful and flexible this product can be. Throughout the presentation, feel free to ask questions in the Q&A box that's been provided by WebEx. And at the end, we'll try to get to as many as we can. If we're unable to answer your question today, we ask that you forward your inquiries to the options team at vloptions@valueline.com, and we'll do our best to get back to you as quickly as possible. Purchasing or selling options can be a great way to improve your portfolio. They allow investors to take positions in a given equity at a relatively low cost, and they're flexible, presenting you with the opportunity to adjust your existing equity positions to augment your risk and return profile. Options even have the potential to provide superior returns through leverage or by boosting current income. And so we think it's important for strategic investors to have a good working knowledge of options so they can incorporate them into their respective portfolios. The Value Line Weekly Options Survey provides information and ranks on all regularly listed options. With some variability, this typically includes more than 600,000 options on more than 2,900 stocks and closed-end funds. To try and ensure that you have the availability to take advantage of any trading opportunities as they arise, our model is constructed so that it's updated on an hourly basis over the course of the trading day. In order to access the option survey, simply head to valueline.com and sign in with your username and password. Then from the welcome screen, click on Options. Located at the top of the Options homepage, you can see our navigational tabs titled Commentary, Screener, Survey Issues, and Resources. The Commentary tab is what you're viewing now, and it's essentially our options homepage. It highlights all the recent editorial content that's been posted to the survey, and upon scrolling down the page, you can see most of the articles that have been added here over the past week and a half. At the bottom of the page, you can also select any of the given page numbers, and this will allow you to preview past articles that have been posted all the way back to the survey's inception. Every Monday on this page, you'll find our Common Rank Changes report. On Tuesdays, it will display our most recent weekly option screen report, as well as a second article that features an option strategy on an individual stock. On Wednesdays, we release our weekly option rank performance page, and on Thursdays, we have our weekly strategist report. The Common Rank Changes report highlights those stocks that have had their common ranks changed over the past week that also have attractive options for any of the 4 primary option strategies. On the site, you can see a few examples of these stocks. Then, upon opening the PDF, you can see the full article, which reveals all stocks that meet these criteria grouped separately into the 4 primary option strategies. Back on the website, we include a list of the featured screens that we use to filter these options, and if you're interested, you can save these screens for later use. Moving on to our weekly screen article. This article takes a snapshot in time of the results for a particular strategy that the analyst has deemed attractive given the current market fundamentals as well as any pertinent geopolitical or macroeconomic factors. This particular report deals with attractive put buys. It features a short explanation of the economic backdrop and why it's conducive to the option strategy that's been selected by the analyst. Like the Common Rank Changes article, you can get a fairly in-depth preview on the ValueLine website. Then in the attached PDF, you can view a table of the specific screen criteria that was used to generate these results. In this screen, the analyst was seeking out attractive put buys with a delta between 20 and 60 that offer a minimum amount of protection of 10%. They've set a cap on the potential bid-ask spread at 30%, and they're looking for positions that are at least accurately priced. Taking these screening criteria into consideration, you can see all these results that were generated by taking a look at the table at the bottom of the page. We're going to show you a few more details on the ins and outs of the screener later on. But for now, we're going to continue with a background on our weekly reports so you know exactly what you can expect from us on a weekly basis. The second of the 2 articles that are typically disseminated on Tuesdays is the option strategy on an individual stock. And in this article, we'll highlight a particular company, discuss its profile as a business, and highlight some of the specific information like its recent earnings performance and how its stock price has been performing of late. This particular report takes a look at Starbucks Incorporated, and it's a covered call report. As you can see, it features all of the company's specific information that we've discussed. And if we scroll to the bottom of the page, we can see the specific option suggested that's been made by the analyst in the designated box. Now in these boxes, call options will appear orange at the header, and put options will appear with a green header. Looking here, you can find many of the more pertinent facts about the option. Usually for your convenience, the analyst will take some of the key statistics from these boxes and highlight them in the article. In this particular case, we've noted that the strike price on the option is 80, and it expires on September 16th of 2022. The premium received upon writing the call offers a protection of 6%. Protection represents the amount the underlying stock can fall in price at expiration before the writer starts to lose money. Finally, the per annum yield on this covered call is estimated at 21.22%, assuming a similar call is written at the same time this one is set to expire, also known as rolling the call. Moving on, we can show you our weekly option rank performance article. This article comes out every Wednesday, and it shows the compiled weekly performance of all options that exist within the ValueLine universe that have also been identified by our screener as having attractive characteristics for the primary option strategies. In other words, it will display all of the call buys with a rank of 1, all of the call writes with a rank of 5, and so on. The performance metrics that appear here are calculated using the closing prices from Tuesday through Tuesday the following week. And as you can see on the PDF, it gives a comprehensive breakdown of how each of these strategies performed on an individual basis. On the right-hand side of the page, the PDF also provides the performance of our market-neutral hedges. These are combined strategies that when put together create a synthetic position. It's important to be aware of the fact, however, that this article is really meant to highlight the strength of the options ranking system above all else. We say that because given the sheer volume involved in calculating some of these performance metrics, as you can see, many feature upwards of tens or even hundreds of thousands of options. It's not entirely practical to replicate the portfolio. With that said, the weekly option rank performance article still highlights the quality of our ranking system and how it can be used to help build your portfolio of options. Now for the last of our weekly articles, we'll provide you with a brief synopsis of the weekly strategist report. This report comes out on Thursdays, and it's typically a bit more in-depth and educational in nature than some of our other reports that we release throughout the week. We found that utilizing this format helps to explain more of the nuanced elements of the option screener, the option survey. But these reports also range from strategic topics like hedging your portfolio with options and protecting your assets with options to more entry-level information targeting our newer subscribers, like navigating our website and the refresher course on our screener. This week's article, Using Options in Your Individual Retirement Account, points out how different option strategies can be employed inside your IRA, along with the benefits of those actions. We think all of these weekly articles can be very helpful in keeping you updated on highly ranked options, giving you examples of how we, the analysts, use these tools to generate screens and select potential option positions, and providing you with educational and strategic information that can help you become a more well-rounded investor. Clicking on any of these reports that we've highlighted will also typically lead you to a series of relevant and helpful links and attachments. Now, apart from the articles that the option survey offers, if we move on to the next tab at the top of the home screen, you'll see our option screener. The screener is an extremely customizable tool that operates using updates that take place on an hourly basis, based on prices starting at 10 a.m. and running through the end of the day and market close at 4 p.m. For newer users, and to make it a little easier to filter results, it caps off the number of options that you're able to select and download to 1,000. But if you prefer an unlimited quantity of options, we also offer an expanded screener, which is located under the Resources tab. We find that tool is typically more useful to experienced investors who are familiar with downloading data and incorporating it into Excel spreadsheets for additional filtering. But as for this screener, you can see by scrolling down the page that it also offers a lot of specs that can help you customize your search. At the halfway point, the first metric that we'd like to show is titled Ranks. This section is probably the most important if you want to harness our proprietary ranking system. The option ranking system that we provide is based on two items. First is the timeliness rank of the underlying stock. Timeliness ranking system is scaled from 1 to 5, with 1 representing the highest rank and 5 representing the lowest. And so stocks that possess favorable timeliness ranks of 1 or 2 are more likely to be highly rated for bullish option strategies, like call buying, covered call writing, and put writing. While stocks that feature unfavorable timeliness ranks of 4 or 5 are more likely to have options that are suitable for bearish strategies like put buying and naked call writing. After taking into account the timeliness rank of our system also determines whether an option appears undervalued or overvalued based on our model's adjusted volatility forecasts. And when you put these statistics together, for example, we can say that an option that appears to be undervalued and is based on a stock with a timeliness rank of 1 is an option that is likely to hold a top option rank for call buying. We'll come back to ranks in just a moment, but for now, if we scroll back toward the top of the page, we can show you one of the more general ways the screener will let you refine your search. Here under basic information, you can simply type in the name of an individual company or index, and it will allow you to search for all the options that are available. You can also search here by entering in a single ticker or a series of tickers into the designated box. So for example, we're going to type in the tickers for Walmart, WMT, and Lockheed Martin, LMT. Upon completing the search, you can see that we've got more than 1,000 different options. This makes sense as we haven't yet filtered out any specific metrics associated with these stocks. But you can do so by heading back to the screener page and making a few adjustments. Let's say you wanted to conduct a search for these same two stocks, but we're only interested in looking for call options, or we're only looking for put options specifically. From the screener, we can make these selections from the list of preset screens, and this will allow us to refine the search in that way. We can also scroll down to the bottom of the page and select, click here to edit display options. And when the pop-up appears, we can use the drop-down arrow at the bottom of the page to adjust the number of options that are displayed in our results for each of the selected stocks or indexes. Now, if you as an investor aren't targeting any individual equity specifically, you could leave most of the page untouched and just use the preset screen box on its own. This will allow you to choose from the 11 different preset screen options that are shown, including highly ranked stocks that exist in our VLIS 1700 and VLIS small and mid-cap surveys, as well as call options, put options, leaps, which are longer term options, or any of our recommended options. To the left, The box marked industry will allow you to select an industry or any number of industries in which you might like to conduct a search. You can also pair these two search criteria together if you're seeking specific strategies to pursue in a given sector. So for another example, let's just say we add no data to the screener and we just go ahead and select naked call buying from the list of preset screens. We edit our display options and set our results to show only one option per underlying stock. Then, upon conducting the search, we can see that the screener yielded 56 different options, including companies like Uber Technologies, Apple Incorporated, and Micron Technology. Then if you go back to the screener and scroll a bit further down the page, you can go back to our 8 rank selectors, and these will harness our option ranking system to give you option positions based on the selected criteria. For call and put buying, as well as covered call writing and married put buying, options are ranked from a 1 to a 3, with 1 being a buy or a write, 2 being a hold, and 3 being a rank that signals when to close out the position. On the other hand, for naked call and put writes, options are ranked from 5 to 3, with 5 being a write, 4 being a hold, and 3 being a close. Clicking multiple boxes in any given row can broaden the number of options that meet your criteria, and clicking boxes in different rows will allow the screener to combine common ranks and technical ranks with highly ranked option trades. You can also refine your screens using the additional option information segment of that page. Here, the drop-down arrow shows you more than 45 different criteria for your search, including bid-ask spreads, expiration dates, and percentages in and out of the money. These fields are separated into 5 divisions that focus on covered criteria, information about the underlying stock, margin specifics, the option itself, and the investor's risk tolerances. Also, before you proceed to submit a search, you can click the Edit Display Options link at the bottom of the page that we used earlier to edit the metrics that will be displayed when your results appear. From here, you can simply add or remove columns by highlighting a column criteria and clicking the left to right arrows that separate the box titled Available Columns and Displayed Columns. Then at the bottom of the page, you can also sort your results in advance of the search or designate the number of options that you want displayed for each individual stock or index. Don't forget to save your display options before clicking OK and closing the box. Putting it all together for the screener, you might find it a little tedious to repeatedly open the page, select the ranks and strategies that you want, and continue to add even more data into the available fields as you scroll down the page. But if you head back to the top, you'll notice that we offer you the opportunity to save screens. This will allow you to seamlessly access them for later and repeated use, or continue working on them if you started creating a screen but haven't yet finished. Once the screen has been saved, simply click Choose File, select the screen, and then click Open to bring it up once again. Moving on to the other tools that the Options product offers, if you turn your attention to the left-hand side of the page, you find a link to our list of recommended options. This part of the website features lists of highly ranked options for each of the 6 basic strategies, including call buying, naked call writing, covered call writing, married put buying, naked put buying, and naked put writing. These recommended options are typically beneficial to our newer subscribers because they can help create a working knowledge of the primary option strategies while also offering companies that might seem attractive for option investing. By selecting any of the given option strategies from the drop-down menu, clicking Search, you'll be presented with up to the top 200 picks for each of these strategies. This program limits the number of options per underlying stock to a maximum of 5 to make sure that you're given a more diverse assortment of selections. Notably, however, one limitation of the recommended options list, and the reason why we say it's really more useful to our newer subscribers, is that it does not take into account any of the investment considerations that are specific to you. These options are highly ranked, but if you wanted to search for highly ranked covered call options that are specifically at least 5% out of the money and expire within the next 30 days, you'd have to input that data into our standard screener in order to retrieve those results. Now, with that in mind, we'll also encourage you to delve deeper into potential investment positions that you've been able to highlight using our screener, just to make sure that the company's specific information that you found matches up with your investment thesis and general suitability. We're going to come back to the screener in just a minute for a bit more of an in-depth explanation, but for now, we just want to take a moment to touch on the remaining tabs that are available on the options homepage. First is the Survey Issues tab, where you can find our past weekly strategist reports, archived here for educational use. Oftentimes, these reports will highlight a particular investment strategy and dive a bit deeper into the application. These articles can also help you understand what tools the Value Line Options Survey offers, like the screener, how they're used, and how they can be better employed to harness a particular option strategy. Heading over to Resources, similarly, a lot of educational offerings can be found here under Resources tab. Most of these links have been long-standing features of the options product, but the educational how-to guides at the top of the list is probably your most useful source of information on how to use the option survey and the various option strategies. It contains a glossary for reference if you're having trouble determining what certain values mean or what acronyms in your results might stand for. It also offers a guide that's titled How to Invest with Options, which contains a number of examples and visuals that can help you better recognize opportunistic investments. Back on the resources page, you can see things like options by stock ticker, which gives you the full option chain of any stock or closed-end fund that you enter. We'll also have the expanded screener, which we discussed before, and we offer some downloadable Excel software as well. We really want to make sure that you're able to harness these tools to help increase your portfolio's return when markets are relatively calm and relieve volatility when levels of uncertainty are high. And so to round this all out, we're going to bring you back to our screener page and put the product into action a bit to show you just how useful it can be. And for some of our newer potential users, we're going to try and give you some level of comfort by making sure you can decipher what you're looking at when you finally retrieve your results. Now, typically, we find that a lot of our subscribers gravitate towards writing covered calls. For those of you that are completely new to options, the covered call strategy consists of purchasing the underlying stock or maintaining an existing position in a particular equity, and then writing call options on that same security. The strategy allows you to boost the yield on your overall portfolio during times when upside potential might be limited, or even when you might just have a basket of stocks that you're holding and want to maintain, but still want to use your position to generate immediate income. In the screen we're loading up for you now, we're looking for rank 1 covered call rights that are based on stocks that have a common rank of a 1 or a 2. We're going to set our display options to account for one result per underlying stock, and under the additional option information section, we're specifying that we're looking for a delta with a minimum of 20 and a maximum of 45. We do this to help make sure that there are no options too far out of the money or too deep in the money. We're also going to add specifications for options that provide protection of at least 2% and a dividend yield of 1.5%. So if we implement all these criteria and proceed to run a search, you can see that the screen returned 56 different options. And if we were to continue to play around with these inputs, you could see how even modest changes in any one given metric can have a fairly strong impact on the output that you're given. So with that said, we're going to go ahead back to the screener and introduce a minimum value for expiration date. We're going to go with, let's see, November 1st, 2022. Then when we run the screen again, we can see now that we end up with, just a second, 50 different options. Hold the number down a little bit there and refine the search. You can see that the screener is highly sensitive to the adjustments of inputs, but it's also highly customizable. So you can search broadly or get very granular to find the options that work well with all different specific strategies. And again, because you're building accurate screens that meet your preferences, it may take some time and some tweaking here and there. You can always save your screens for repeated use or come back and make changes to them later. Now that we have our condensed list of options, which meet our parameters for covered calls that have deltas between 20 and 45, offering 2% protection and a 1.5% dividend, expiring no earlier than November 1st of 2022, we can choose one from the option list of results. In this case, we'll select Fidelity. the top of the list. When we proceed to just tick the box to the left-hand side of the option on the list, head back to the top of the page and click View Profile. It'll bring up the in-depth option profile. Here you'll see a familiar box that will show you some of the relevant criteria pertaining to the individual option. We're looking at Fidelity. This option expires on November 18th, 2022. It has a strike price of $110. The covered per annum yield is 15.77. So again, that means that you'd be writing a similar call about the time this one's set to expire for the duration of a year. And it offers downside protection of 6.91%. Now it's important to highlight and remember that not every screen is going to generate results. It is possible that you can get too specific in your screening criteria, and you can inadvertently eliminate all possibilities. The screener might also yield 0 results when looking for a particular option strategy or a specific company, if the stock just doesn't have any attractive options that match up with that particular strategy at a given point in time. In that instance, we suggest that you can check back at a later date or widen your search criteria, and that might help you retrieve some results that are at least close to the criteria that you're looking for. We think this level of variability is actually one of the primary benefits of the screener process because it allows the product to cater to pretty much any investment preferences that you might have. That's also one of the reasons why we have our weekly posts, so we can highlight how the screener and the weekly option strategist can be utilized to meet your preferences, whoever you may be. Now, before we conclude this presentation, we'd like to take this opportunity to show you just one more screening strategy that we think can be useful. We've displayed how to generate immediate income on an equity position using a covered call, but what if you wanted to limit the amount of downside risk that you're taking on by holding a particular equity? In this case, you could choose to implement a married put strategy, where you'd maintain your existing position in the underlying stock and then proceed to purchase an at-the-money or out-of-the-money put option to create a floor should the equity's value fall. Those of you that are new to options trading can view this as similar to purchasing an insurance policy, where even if the stock continues to appreciate in value, you've only increased your break-even point by the value that it costs to purchase the option. Harnessing the married put strategy requires existing holdings, and so for our example, we're going to pretend we're currently have a position in Big Lots. Ticker is BIG. Stock currently carries a common rank of a 4 or 5, so it might be a suitable selection for put buying. In our screener, we're going to use the stock ticker box that we highlighted before to enter the ticker for Big Lots. Then we're going to use the preset screen box to highlight that we want puts only. Moving down the page, we're going to tick number 1 next to naked put buyers in the rank section. This will ensure that we'll only retrieve the highest ranked put options on BIG stock. Finally, we're going to go back into our display options, and we're going to use the drop-down arrow at the bottom of the page to make sure that the screener displays all the options that are available to us. We save and then proceed to conduct the search. From here, we can see that we've returned 107 different options on Big Lots with varying strike prices, expiration dates, and costs, depending on the distance in or out of the money, as well as other variables. Now, upon selecting an option and proceeding to hit View Profile at the top of the screen, we can see the various statistics associated with this particular option. As you can see, introducing statistical data into your search and finding options that suit the strategy you want to pursue is a fairly straightforward process. And with that, we're going to conclude this presentation on the Value Line Daily Options Survey. For anyone who'd like, we can email you our preset screening data and display criteria for the covered call screen that we highlighted today. This will allow you to load them into the screener anytime you want and generate results based on the most up-to-date option pricing information. We also offer preset screen files for all of the primary option strategies. If you want, you can start off with these base screens and then make adjustments like we did in the examples to tailor them to your own preferences. This video will also be made available on Value Line's YouTube channel within 24 to 48 hours. But for now, I'm going to turn the call over to one of our other senior analysts and representatives of the options team here at Value Line, Rob Scordato, who's going to be able to answer some of the questions that you've posed throughout today's webinar. We really hope that you've enjoyed this introduction to the Value Line Option Survey. And once again, if there are any questions that we were unable to answer, we welcome them at vloptions@valueline.com, and we'll do our best to make sure that we get back to you as soon as possible. Go ahead, Rob.
Thanks, Brian. Good afternoon, everyone, and thank you again for joining us today. I'm Rob Scordato, and I'm one of your other senior equity analysts here at Value Line and another member of the options team. I'm going to try and answer some of your questions here, some of which were submitted before the webinar and others that we received during today's live session. So our first question comes from Ed, and Ed wanted to know how important is the quality of the underlying stock when transacting an option? So option values are based on a number of inputs, and because quality can be viewed under such a highly subjective lens, the importance of the quality of the underlying stock can vary pretty widely. You could say that the quality of a stock helps establish important metrics like delta, implied volatility, and premiums. However, recent price fluctuations, the time until the company's next earnings report, and recent news can also greatly impact these figures. It's important to remember that options can be equally bullish and bearish as well. So if your plan is to purchase a call option on a stock, you would want the quality of the underlying stock to be solid. On the other hand, if you were bearish on a sector or an industry and you were looking to buy naked puts on a particular company, you'd want to look for underlying stocks that might be of lesser quality, which would have a higher likelihood of declining over the duration of the option. So while the quality of the stock and likewise the underlying business are important to investigate when performing an options transaction, we encourage you to consider a wide net of factors that could be impacting the option's value before submitting that it meets your suitability. The next question comes from Jimmy, and Jimmy asks, what LEAP trading strategy can I use with your dividend and growth portfolio? Assuming Jimmy is referring to our model portfolios that we manage in the selection and opinion section of the Value Line Investment Survey, a strategy that might be useful to harness the LEAP to create somewhat of a virtual dividend. And I say virtual dividend because when you invest in LEAP options, you don't actually collect dividends from the underlying stock. You're investing in the option. But if you do buy a LEAP call option and you gain upside leverage to that stock over the long term, you can choose to sell short-term out-of-the-money call options on the underlying over the duration of the LEAP in order to generate current income. The short-term options are likely to lose time value more quickly than the LEAP does, and this is also a part of the benefit of taking that strategy. If you did want to participate in the dividends of the underlying stock, you could also consider buying and holding the equity. Then you could write covered calls on that position. And if the call is in or near the money at expiration, then you can roll the call up and out at a higher strike at a further date. That way you'd be able to collect the stock dividends as well as generate income premiums on the calls that you write. Our next question comes from Tom, and Tom wanted to know, if I pick a stock that I want to purchase options on, how do I know which strike and expiration will provide the best results? Tom also wanted to know in a separate question if the options product could be used without employing our other products. So first, allow me to just say yes, you can absolutely use the options survey by itself. You don't need to utilize any of the other products for this service or to use the screener. However, using it along with the Value Line option investment survey can be pretty beneficial. With the VLIS product, you can find stocks that pique your interest more easily, and then from there you can harness the option survey to find the best options that exist for those equities. But as far as Tom's first question goes regarding picking strikes and expirations, there's not really always a clear-cut best, so it's something that I can't really comment on directly. Investment horizons in particular are something that investors really need to decide on for themselves based on their respective risk appetites and goals. But the screener we offer is a good place to start since you could find highly ranked options trades to make. Then as far as the strikes are concerned, I would just say that as a general rule of thumb, we wouldn't be looking to go too far in or out of the money because this will leave you having a hard time finding a party that will take the other side of the trade. Spreads are also probably going to be wider in those instances. And so for expiration dates, I would just say try to avoid buying very short-dated options because if the option that you select is anywhere near the money, it's probably going to lose its time value pretty quickly. We had another question from Frank, and Frank wants to know, do you recommend a minimum open interest or volume for options? We definitely do for open interest. Volume not as much because that takes into account how much a particular option has been trading on any given day. So in the early morning, you're not likely going to see a lot of volume for a lot of options. We still say some volume is a good thing. It's definitely worth consideration when looking at a potential options position. But open interest is probably more important. For open interest, for anyone that doesn't know, open interest is how many contracts for a particular option were open at the beginning of a trading day. So we like to suggest that a number of at least 0 exists, and more is generally better. Higher numbers suggest that you'll be able to get in and probably more importantly out of a trade with less friction, and it will more often denote more favorable spreads due to the existing market interest. So for that reason alone, I would almost never choose to invest in an option that has no open interest versus a very similar one that does have open interest. In our screener, you can search for options with a minimum number of open contracts, but how much open interest you might want to look for can largely depend on the size of your trades. If you're looking to trade big blocks of stocks or options, then you would want to look for a higher level of open interest. You can combine that stat with, highly ranked options trades like we showed you earlier. This way you know that you're getting highly ranked trades that also have solid levels of open interest to, once again, make sure that you can get in and, more importantly, out of those trades if need be. Moving on, Nelson wanted to know if we could explain delta. Okay, this is a good one because obviously those of you that are familiar with options know that that delta is one of the Greek symbols that is most often used when discussing options pricing. It's a measure of how quickly the option price will change given a $1 change in the underlying security. Delta can range between -100 to +100 based on the convention that you're using. But if you think about it in terms of a call buy example, and we say we're looking at a 1-month option with a $300 strike price that currently has a bid of $18, and let's say the delta is 50. That would mean that if the stock price jumps $1 to 301, the option will gain 50 cents and be worth $18.50. So again, with a delta of 50, the $1 increase in the stock price leads to a 50-cent increase in the option value. Another interesting thing that you might want to keep in mind about delta is that it can be used as sort of a proxy for how likely an option is to wind up in the money at expiration. So this delta of 50 in this example suggests that there's roughly a 50% chance that the call will expire in the money, and a lower delta of 20 would imply that there's only a 20% chance, while if we said that a delta of 90 would imply that the call option is probably already very deep in the money and is likely to remain in their money at expiration. The amount of time remaining on the option can have a big impact on delta. Thinking about it logically, a far out of the money call that expires in a week will probably have a very low delta, but the same strike for that's much further out in time should have a higher delta since it has more time for the price to fluctuate and therefore a better chance to wind up in the money. Another question comes from Janet, and she said very broadly, what is the best option strategy? This is actually a question we get a lot, but unfortunately the answer is that there isn't one, or it depends on your strategy. Our screener and service primarily focuses on the basic option positions as opposed to complex multi-leg strategies. You can construct multi-leg positions using it, but it's really best suited for finding one option at a time or finding married puts and covered calls. So the best option strategy really depends on what your objective is, what you're trying to do. It varies from person to person. So if you're in a position where, say, you have a basket of stocks and you want to be able to add additional current income on top of your dividends, well, you might want to employ a covered call strategy because that's going to help you accomplish that objective. You could also write cash covered puts that are going to generate income, and this can allow you to enter a long stock position at a lower price than the prevailing market quote based on the premium that you're going to receive by writing those puts. Say you're bullish on a stock. You can use some risk capital to buy a call to gain leverage on an upside position. Or you can buy a put if you're bearish on a stock. Some investors even like to buy out of the money puts on stocks that they own in order to provide some insurance against a downturn for the equity, like we showed you in our earlier example. So all in all, yeah, technically there really is no best option strategy, but whether you're attempting to mitigate risk, generate current income, or add leverage, there's likely an option that can help you accomplish that goal, and you can use our screener to find it. I think that's actually all the time that we have today. So with that, we're going to say once again, thank you again for joining us for this webinar. We hope you enjoyed it. Anyone that joined the webinar today will receive a thank you email that has a link to a free trial. Also, if you're interested in a free trial of VLIS, you can head to our homepage at valueline.com and you can find one there. This webinar is going to be available to you in approximately 24 to 48 hours on our YouTube channel. And remember, if you have any specific option survey questions, you're welcome to send them to us at vloptions@valueline.com. Thank you, everyone, and have a great day.